Hello, everybody. This is Robert Salisbury, your licensed associate real estate broker with Keller Williams. Hey guys, I'm back. I'm back for part two. Of Do You Want to Know How the Bank figures out your mortgage? So I promised you guys I would do part two. First of all, I want to thank you guys for listening to me from part one. I'm just here to give you guys as much knowledge as I can. In any possible way. So to recap on part one, remember, well, first of all, if you want to go back to part one, you can just go back to my page or look for the video for part one. But I'm gonna go through this real quick, just to recap everything. Recap on everything. So first thing first, remember I told you that the bank is gonna be looking for two things. They're gonna be looking for your income, and they're gonna be looking for your debt. So what I told you about debt, what they're going to do is that they're going to pull your credit report. They're going to look at all the minimum payments of everything you have. They're also going to take your income and they're going to divide that by 12. And the example that we gave, we came up with $1,000 for the debt. So we had a $500 car note, a $300 school loan. We had $200 worth of credit card payments. So that put us at $1,000, and then I said that the income was $72,000, and we divided that by 12, and that put you at $6,000 a month for your income. And remember, I said that the income is before taxes. So you take the $1,000 and you divide that by the $6,000. We came up with 16%. And remember, I told you what your personal debt to income ratio is. I also told you there's different types of loans. There's an FHA loan, there's a VA loan, there's a conventional mortgage, there's different ones. Every loan has a different type of debt to income ratio, meaning that the bank is going to allow you to have so much debt based off the loan that you have. So the example that I gave in the previous video was I told you that FHA and VA usually has the highest debt to income ratio, and those can be 50% or higher. And then conventional could be lower, could be in the 30s, 40s, 40% in that range. But in this example, what I did was I used 40% just for this example. So remember, you got the 16% debt to income ratio that you came up with your personal debt to income ratio, and then you have the 40% with the loan. And remember, we took the 40% and we subtracted that from your personal debt to income ratio, and we came up with the 16%. We subtracted the 40% minus the 16%, and we came up with 24%. I'm sorry. And with the 24%, what I told you to do is you take the 24% and you multiply that by the income that you have. And when we did that, we took the $6,000 of income, monthly income, multiply that times 24%. You should have came up with like $1,440. So here's where we at with the $1,440. Like I said, I'm gonna go in more detail about that here later. So once you come up with your payment, what that $1,440 means, that means that that's how much they're gonna allow your payment to be, and that's gonna include a couple things. It's gonna include your mortgage. It's gonna include your taxes, your insurance that you're gonna be paying, your house insurance, and if you guys are gonna be getting a condo or co-op, remember that the maintenance and the common charges is also gonna be part of it as well. And if you're gonna be in some of these communities where there's a homeowners association fee, that's gonna be included in that $1,440. So one of the most important things within that everything that I talked about is going to be the taxes. Here in New York, you have to be careful with taxes because it can be much higher in the suburbs, in Long Island, Westchester County, New Jersey, etc. Some people are paying $12,000, $15,000, $20,000, $30,000 a year in taxes. So this is what you got to do with your taxes. You need to find out what the whatever area you're looking in, and kind of figure out what the taxes are. A lot of times you can go on, if you're looking at a listing, you can go onto the listing and you should be able to find what the taxes was last year, or you can just call a realtor or call a listing agent, and they should be able to tell you what the ballpark, what the taxes are. So what you do with the taxes is, the example I'm gonna use is $12,000 a year. You take that $12,000, you divide that by 12, because you're looking at what your monthly tax bill will be, and with this instance, it'll be $1,000. In the city, in New York City, it's totally different. It may be much lower than that. It could be 5,000, 4,000. It really just depends. But you're gonna have to figure out your tax rate, most definitely. Also, with insurance, you can figure out kind of what the insurance is, just a guesstimate. I said $100, $150, but you need to do some research and figure out what your house insurance may be. But I would say something like that, that I would look for. So, with that being said, the mortgage is going to be the bulk of what that $1,440 is. So what's going to go and play with the mortgage is the interest rate. So, and the better the credit, the better the interest rate. Usually in most instances, if you have a high 600, like 680, 690, up to 700, you're going to probably get top of the line interest rate. But once again, you guys need to consult with a mortgage professional, and they will tell you more about the interest rate that you will be getting. I know that the rates are hovering around 3%. Some people are getting 2.8, 2.9, and that's on a 30-year fix. But for this, I'm going to give you an example here. What I want to do is use $300,000 as an example, and we're going to do it at 3%. And remember, like I said, if your credit is lower, it could be, I don't know, 4%, 4.5%. You really have to go talk to a mortgage professional and find out what kind of rate that you qualify for. So, before we get into that, one thing I'm gonna suggest you guys do. You may want to download one of those mortgage calculator apps onto your phone. You can easily do it. You can just go to the app store. If you got a Android, if you got an iPhone, you can go on there and you can easily go in and get a mortgage calculator. The one that I suggest, it's a mortgage calculator. It's called Zablinkon. Is the developer or something. I like this one because it calculates different things, and I'll get into more detail about that. So with that being said, I'm gonna use the $300,000 as an example. So at $300,000, which you put in 20% down, your payment will be roughly $1,085.25. So you take that the payment and you subtract that from the $1,440, and you'll have like $400 and some odd dollars, and then you got to figure out what your taxes is going to be. So once again, that's why it's super important to figure out the taxes, because sometimes you maybe can afford the mortgage, but the taxes may be too high for that area. So I really suggest you guys kind of figure out what the taxes are. I know I have some people on here from Texas. I know Texas has pretty high property taxes, and I know they can be kind of as expensive as up here in New York. So just remember, you got to look at the taxes in that. Now, another thing I'm gonna tell you guys, if you're gonna be putting down less than 20%, you're gonna have to pay what they call PMI. It's called private mortgage insurance. And basically what that is that's an insurance that you have to pay every month to the bank because you have less than a 20% equity hold into the mortgage that you have. So the reason why I like that app, because it calculates the PMI for you. It gives you an idea. So if you go to the mortgage app that I'm talking about for the mortgage calculator, it's going to show, if you go to details at the top, it's going to tell you how much the mortgage is, and it's going to tell you how much PMI that you're paying. So the example now I'm going to use, if you use 3% at $300,000, if you put down 3%, at $300,000, your mortgage will roughly be $1,299.62. And if you go to details at the top, you're going to be paying like around $72 worth of PMI per month. So based off the that $1,299.62, $72 of that is private mortgage insurance. And that stuff is going to be included into that $1,440 that we talked about in the previous interview. with that being said, just remember that you got to figure out your mortgage payment, and you can figure out how much mortgage that you have. Also, another thing I want to tell you, just because you qualify for a certain amount of mortgage don't mean that that's the amount of house that you qualify for, because the down payment is going to go into play as well. If you have a large payment, you can get more house. So let's just say you get pre-approved for $300,000 and you're looking for a house for $400,000. If you're able to put up the difference, the $100,000 difference, some people are, some people are not. That means that you have that much mortgage that you could use. So it doesn't really matter how much house you're looking for, just as long as you got the down payment to put down for that mortgage. So another thing I want to cover is for you guys that are going to be getting co-ops and condos. If you're going to be getting a condo, the maintenance and common charges is going to be important. So you need to find out what those are, and a lot of times when you look at a list, it'll tell you what the common and maintenance charges are. If you're going to be looking at a co-op, in a co-op, this is something that you guys need to know. You do not have to pay tax. You do pay taxes on a co-op, but the taxes is included in the common and maintenance charges. So that's part of that. In a condo, it's totally different. The taxes is separate. So you need to figure out what the taxes is. So remember that the taxes in a co-op is included in the common and maintenance in the maintenance fees. So with that being said, that pretty much covers everything that I want to go over. But I want to make sure that you guys are educated enough and that you know and have an idea of what you're going to be looking at. Because a lot of times, like I said, when you go to the bank, they just tell you, hey, you're pre-approved for this amount. But it's kind of good that you have an idea of how they came up with these numbers, and you know how to finagle things as far as the debt that you have. You may be able to cut down on some of that. Maybe you need to make a little bit more money and that type of thing. So if you guys have any questions about anything, you guys could definitely give me a call. You can reach out to me at 646-470-2787, or you can email me at rsalisbury@kwnyc.com. And if we're on Facebook or Instagram or Twitter, you guys can just reach out to me. You can private message me, and I can answer any questions that you have. So listen, I hope you guys enjoyed the video. I really, really, really appreciate you guys for taking a look. I got a lot of people that were very glad that I shared this knowledge with you guys. So listen, you guys enjoy your day. And remember, if you need anything, you can give me a call. And make sure that you consult with a mortgage professional as well. All right, guys. Thank you and have a nice day. And I appreciate everything.